Hello students, once again I would like to explain to you one more time how to prepare the financial statements of a banking company with completing example with different adjustments. Now you can see here this adjustment is different from your previous ones. This adjustment is also different. Okay, let's begin. Now the first two important rules, you know that if any ledger has credit balance and trial balance, then you know that it should be treated as either as in liability or income. If it is not liability, then it is income. If it is not income, then it is liability. And at the same time, if any ledger has a debit balance in the trial balance, then it will be either your bank's asset or expense. Okay, now the first thing mentioned in the problem is subscribed capital, and we have one adjustment of it, that is adjustment number 6. It mentions authorized capital of a banking company. So let's record the effect of this adjustment first, that is authorized capital. So we should record that effect under schedule number 1, that is capital. Now there are in total 80,000 equity shares and the face value per share is rupees 10. So 80,000 into 10 is rupees 8 lakh. That's why the paid up share authorized share capital value is rupees 8 lakh. And at the same time, if you see the first particular, that is subscribed capital, in total there is 50,000 equity shares and the face value per share is rupees 10, and it is fully paid up, and 5 lakh into 50,000 into 10 becomes rupees 5 lakh. So this is the paid up capital, subscribed and paid up capital of a bank. Now next in the problem is uh, reserve fund. Now we have reserve fund and the value is 2,50,000, and as the word reserve is there and it has a credit balance, so we can put it under schedule number 2, reserve and surplus. Here reserve fund, so the balance is 2,50,000, 2,50,000. Then next in the problem is loans, cash credit, overdraft. It has a debit balance and it is bank's most important asset, that is advances. So we should consider it, we should record it under schedule number 9, advances against loans, cash credit and overdraft. Next to loan, cash credit and overdraft here. Okay, then 2,85,000 is the value of it. Now next is premises, its value is 50,000. Now we all know that in trial balance we get the closing balances of the ledgers of the different accounts. So the closing balance of premises is 50,000, and as for the adjustment number 7, we have to charge depreciation at the rate of 5%, and that on the opening balance. Now the question is, what is the opening balance of the premises? Now you read the first sentence of adjustment number 7. According to this sentence, we know that rupees 10,000 were added to the premises during the year. That's why on the basis of this we could say that the opening balance of premises is rupees 40,000. So schedule number 10 here. Now see the book value is rupees 50,000, is rupees 50,000. It is the closing balance is rupees 50,000, and the addition during the year is rupees, addition made during the year is rupees 10,000. Therefore the opening balance, therefore the opening balance of the premises is rupees 40,000, is rupees 40,000. Now we are told to charge depreciation at the rate of 5% on the opening balance. The opening balance is 40,000. Therefore the 5% of 40,000 is rupees 2,000. When we have to deduct that much amount from the from the from the balance of premises, and the balance of premises on 31st March is 31st March is rupees 2,000. So let's deduct 2,000 from 50,000. So the remaining balance of premises is 48,000. And the second effect of depreciation we should record under schedule number 16, that is operating expenses here, rupees 2,000, 5% of 40,000. Okay, now the next Next particular problem is Indian government securities. It has debit balance and it is bank's investment. So we should record it under schedule number 8 investments here. But in the problem we have adjustment, and as per the adjustment, the market value of investment is 390,000. So we have disclosed that information. We have here in inner column under the particulars, but calculation purpose we are going to consider only rupees 4 lakh. If you are going to consider rupees 3,90,000 for calculation purpose, then it means if you want to show the investment at the current market value, that is 3,90,000, then the appropriate effect, that is the next effect, the corresponding effect, that is depreciation in the value of investment, you should record here in schedule number 14 other income as a loss on revaluation of investment, and in bracket with the with minus sign show rupees 10,000, and from the other income of the same schedule, that is 14, you should deduct that balance of rupees 10,000. But as here we are showing the book value and we are going to consider only the book value for calculation purpose, then there is no need to consider uh, the market value for the calculation purpose. Only disclose it in schedule number 8, that is investments. Next in the problem is current deposits. Okay, next is current deposits, fixed deposits and saving bank deposit, and these three ledgers have credit balance in trial balance and trial balance statement, or and these are the liabilities of a bank, so we should consider them under schedule number 3, that is deposits here only. Okay, current deposits, fixed deposits and saving bank deposits. Okay, the next in the problem is salaries, general expenses, rent and taxes and directed fees. These four have debit balance in trial balance, and we all know that these are expenses of a bank. And for recording expenses other than interest paid, we have schedule number 16, that is operating expenses. So we will record all these expenses here under schedule number 16, operating expenses. Now the next in the problem is profit loss account as on 1st April 2019. We are preparing balance sheet as on 31st March 2020. So this is the profit at the beginning of the accounting year 1920, and it has a credit balance and it is a profit, and we should disclose that profit here. uh, we should disclose that profit here. Let me copy the figure, and here we have to show it here in form B, that is profit loss account, next to profit brought forward. Okay, next in the problem is interest and discount. It has a credit balance, and we all know that it is bank's income earned from interest and discount. And for recording income received in the form of interest and discount, we have schedule number 13, that is interest earned. So show that balance here, 1,28,000 here under schedule number 13, interest earned. Now the next in the problem is stock of stationery. Now it has debit balance, and it is bank's asset, and for recording it we have schedule number 11, other assets. So we will record it under schedule number 11, other assets. So here 8,500. Okay, now the next in the problem is bill purchase and discounted. It has debit balance, and we all know that it is bank's one of the most important asset, that is advances. So let's record it under schedule number 9, advances. Okay, after that the next particular in the problem is interest dividend paid, that is rupees 17,000. Okay, 17,000 is paid, but we have adjustment, that is interim dividend declared was 4% actually. We all know that dividend is an appropriation of a profit, and dividend is always declared on its paid up capital. Now in the problem, the paid up capital is rupees 5 lakh. 5 lakh. Okay, I have prepared here one working note, that is working note number 2. Okay, calculation of interim dividend and unclaimed dividend. See, the paid up share capital in the problem is rupees 5 lakh. Now the rate of dividend is 4%, and therefore the payable interim dividend is rupees 20,000. but paid interim dividend is only rupees 17,000. Therefore, the balance, that is 3,000, is the unclaimed dividend. As I have told you, dividend is paid from profit, so it is an appropriation of profit, and we should record rupees 20,000 here as dividend declared. And but out of 20,000, only 17,000 is paid, so remaining 3,000 is the unclaimed dividend. And we must record that unclaimed dividend under schedule number 5, that is other liabilities and provision. Here 3,000 rupees. Now see, unclaimed dividend, we have calculated it by deducting 17,000, that is interim dividend paid, from dividend declared, that is rupees 20,000. Okay, now next in the problem is, now we have recurring deposits. It has credit balance, it is bank's liability, it goes under schedule number 3. Okay, the next is, we have shares, it has debit balance, it is bank's asset, 1,50,000. So here investment, schedule number 8, investments. Okay, next is cash in hand and cash with RBI, balance is 1,93,000 and it is bank's asset, and we should record it under schedule number 6, cash and balance with RBI, cash and balances with RBI, 1,93,000. Okay, next is now money at call and short notice. Now it is also bank's asset, and it is recorded under schedule number 7, balances with banks and money at call and short notice. Here schedule number 7. Okay, okay, now make a provision for bad and doubtful debt, rupees 5,000. So let's make a provision for bad and doubtful debt, that is rupees 5,000. The first effect we have to record under provisions and contingencies, working note number 1, that is provisions made for bad and doubtful debt, that is rupees 5,000. And the second effect, we have to deduct it from schedule number 9, advances, that is rupees 5,000, in bracket show 5,000 rupees in bracket. Okay, now the next is next adjustment. Okay, we will discuss first adjustment number 3, unexpired discount, dividend bill discounted, amounted to rupees 380. Now the first effect we have to record, actually we have to deduct it from schedule number 13, that is interest earned, 380. Deduct it from here, schedule number 30, interest earned, that is rupees 380, as it is not the income of this year, it is the discount of the next year, but which is received in advance, so it cannot be treated as an income of the current financial year. And the second effect we have to record under schedule number 5. Okay, that is here, unexpired discount or dividend bill discounted, rupees 380. Okay, next in the problem is, next adjustment is, okay, endorsement made on behalf of customers total rupees 1,50,000. It is bank's contingent liability, and we have schedule number 12 for recording such liabilities. So 1,15,000, acceptances, endorsements and other obligations. It is known as acceptances, endorsements and other obligations. Okay, now only one adjustment is left. Okay, interest accrued on investment was rupees 8,000. Now here you should ask yourself, being a student, what is interest accrued on investment and what are the possible effects of these adjustments. Let me give you one example to clarify you the concept of interest accrued on investment. Now let's say you are a bank and you have invested a certain sum as on 1st January 2020, and it will mature on 13 June 2020, and on 13 June 2020 you will receive interest amount of rupees 16,000. Look, your date of investment is 1st January 2020 and date of maturity is 13 June 2020, and as of 13 June 2020 you will receive rupees 16,000 as interest. Now you have made an investment for 6 months. Your investment period is 6 months, but out of the 6 months, the period starting from 1st June 2020 to 31st March 2020 is the period of academic of financial year 1920, and next 3 months, that is 1st April 2020 to 13th June 2020, these 3 months are a part of next financial year, that is 2021. It means 6 months interest you are going to get rupees 16,000. It means for these 3 months the interest amount is 8,000, and for remaining 3 months the interest amount is 8,000. See, now that 8,000 rupees is actually you should be treated as an income of financial year 1920, though it is going to be received in next financial year as on 13th June 2020, but it is treated as an interest accrued on investment. It is treated as an income of the financial year 1920, though it is not yet received, and it will be received in next financial year 2021. So such a 8,000, I could say that it is bank's interest, it is bank's income, and which will be received in next financial year. So this 8,000 interest accrued means what? Interest of the current financial year, but means income of the current financial year. I could say that it is income of the current financial year because of the word investment. So it is the interest of the current financial year, but it will be received in next financial year. Though it is of current financial year, it should be treated as an income on a due basis. That is, such it is known as interest accrued on investment. So its first effect, we should consider that income in schedule number 13 here 8,000 rupees, 8,000 rupees, and as it will be received in next financial year, so it is also treated as an asset of a bank. So we have schedule number 11 for it, and we will record it under schedule number 11. That is 8,000 rupees. In schedule number 11, interest accrued on investment 8,000 rupees. Okay. Now we have provided the effects of all adjustments, and we have made posting of all the particulars of trial balance. So let's close first profit loss account. Let's close for schedule number 13, interest earned. So 1,28,000 plus 8,000 rupees, and from this total we will deduct rupees 3,380. So the balance is 1,35,620. So this is the net interest earned, 1,35,620. So here I'll type 1,35,620. Now schedule number 14. Schedule number 14, okay, it has nil balance, so I'll type here nil. Now schedule number 14 has nil balance, schedule number 15 has also nil balance. Okay, now make a total of schedule number 16 figures, it is 61,500. So here I'll type 61,500, and it has nil balance over here. There is no balance in schedule number 14, so it is also nil. This ledger is also closed with nil balance. Now provisions and contingencies, I think we have a figure of 5,000 here for provisions and contingencies, so I'll type here rupees 5,000. Now therefore the total income is 1,35,620, and the total expenditure is 66,500. Now let's calculate the net profit of the current year. For that, from the total of the income, that is 1,35,620, we should deduct the total of expenditure, that is 66,500. Therefore the current year profit is 69,120. Now the total profit is 85,120. Look here, the current year profit is 69,120. 16,000 is the profit at the beginning of the accounting year, and this is the total profit. So this is the lifetime profit of a bank as on 31st March 2020. Now let's make a provision for statutory reserve, and as per section 17 we should transfer 25% of current year profit, that is 69,120, to statutory reserve. So 25% of 69,120 is 17,280. So let's transfer first this figure 17,280 in schedule number 2. 17,280 17,280, which is 25% of current year profit, that is 69,120. So look here, current year profit is 69,120. 25% is, as per section 17, 17,280. 17,280. Okay, now let's close the appropriation part. 85,120. From 85,120, look here, from 85,120 we have transferred rupees 17,280 to statutory reserve, and 20,000 declared as a dividend. So the closing balance, or the balance carried over to balance sheet of profit loss account, is 47,840. So 47,840 here, 47,840. Let me check again. 47,840. Okay. Now profit loss account is closed. Now let's close one by one all the schedules of balance sheet. The first is schedule number 1, capital, and balance is now 5 lakh of capital. So rupees 5 lakh here. Now the next is surplus 3,15,120. So 3,15,120. Now number 3 is deposits. The total is 3,95,000. So here 3,95,000. Now next is borrowings. Okay, nil balance is here. So that nil balance, schedule number 5, 3,380. Schedule number 5, 3,380. So here 3,380 nil balance. Okay. Let's make total of asset liabilities, that is 12,13,500. Now schedule number 6, 1,93,000. So 1,93,000. 1,93,000 rupees. Now schedule number 7, 80,000 rupees. Schedule number 7, 80,000 rupees. Schedule number 8, 5,50,000. Schedule number 8. Okay, then schedule number 9. Okay, let's make addition of first. We'll do like 85,000, then 46,000, and from the total deduct 5,000 rupees. So 3,26,000 rupees. So 3,26,000 rupees here, schedule number 9. Okay, next is number 10. 48,000 only. 48,000. Okay, number 11 now. Number 11. 16,500. Okay, and finally schedule number 12. 1,15,000. That is acceptances, endorsements, and other obligation. 1,15,000. Now 12,13,500. Now you can see the total of liabilities matches with the total of assets. So this problem is over. So the problem is solved.